Hello and good morning, traders. I hope everybody's having a great start to your week. I wanted to hop on real quick and show my very first futures trade in natural gas. As many of you know, I had traded in a paper account and had also been trading ETFs and ETNs prior to switching over to futures recently, and I wanted to make sure to get a video up of this very first futures trade for natural gas. As many of you know, natural gas has been in a downtrending pattern for several months since reaching a high close to 3, I think it was 2.905 in November, and then it has been continuously downtrending since. This is the 20-day 1-hour chart. As you can see, I've identified a new channel within the larger channel that it has been moving in now for a little under a month, and it's been pretty consistently respecting the 200 moving average on this chart. So I identified a new demand zone here on 2/10, so February 10th, 2020, and I've been watching the price action there since. And as you can see, we reached a low of 1.753 on 2/11 at 4:20 a.m. And since then, natural gas has been trending up consistently. Okay, let's pop back out to a larger time frame again real quick. As you can see, we had a significant gap down below this zone, which led to the next low that we were just speaking about. Frequently, prices will attempt to fill the gaps, or at least partially fill the gaps when there's a dramatic drop in price. Again, sorry about the video quality and the wiggly hand. I will eventually download OBS, but I haven't done it yet. So, anyway, as you can see, natural gas attempted to fill that gap. However, it didn't quite make it when it started showing signs of a possible either pullback or full-on reversal. So I had my alerts set to tell me when the price started to turn back around, when it reached a certain point. I observed the candles, the price action here. We got 3 good bull candles, and on the 4th bull candle, bear candle, we got 3 bear candles, and then the 4th candle dipped down below the 9 EMA, dipped down below this previous price level that I've identified as an important area, and I decided to go ahead and take one contract short at 1.829, and my stop loss was at 1.84 because the previous high level in this time frame is 8.39. So I was placing my stop at 1.84 just to give that a little bit of room to possibly bounce in this area back up to that high, which it did not do, as you can see. So I followed the price action for a little bit, was planning to get out if it started to bump back up to the top of this zone, just so that I could lock in a little bit of my profits. However, as you can see, it decided to have a nice big surprise bar down to the VWAP. And as you can see, I only use the middle VWAP. I don't use the top and bottom VWAP. I find it to be too distracting. So I've got the 9 moving average, the 50 moving average, the middle VWAP, and the 200 period moving average. And I don't use those to determine my entries or my exits frequently, but I use them as a reference on my chart while I trade. So as you can see, I closed out this contract at 1.819, and I entered it at 1.829. So that was a nice little move, and I locked in profits at $100 for the day. I'm going to observe the price action here around the 50 and the 9. And I will either take a new position as price heads down from here, or I will wait for, from here at the 50 and the 9, or I will wait until price moves back up into the 8.39 area and hopefully heads back down again. I hope everybody has a fantastic day, and remember to cut your losses early. This video is not intended, and none of my videos are intended in any way to encourage you to take a position in any equity or future. Trading carries with it a substantial risk that you will lose all of your money, and possibly more money than you put into your account. So make sure that you are practicing in paper trading accounts and speaking with financial advisors before you decide to take any positions. I hope everybody has a great day, and I'll chat with you next time. Bye.